Okay, good afternoon, everyone, and welcome to OptionsPlay. Today, we're going to be talking about how to place directional trades using OptionsPlay. And this is important because whenever we trade options or stocks, we must first have a directional view on the underlying stock or ETF. So today, what I want to do is take some time out and show you guys what type of indicators we've built with our platform that you guys have access to in order to help you utilize give you a clear directional view on any underlying stock so that you can set yourself up for success, whether you're trading stocks or options. So during today's webinar, I'm going to go over a few different things regarding our platform, the indicators that are available here, and how you can utilize it. And I want to make sure that everyone leaves here today feeling confident not only in the knowledge that we teach you about how to use these indicators, but more importantly, so that you feel confident in being able to utilize the platform that you guys have access to start actually looking at some stocks, engaging the stock's trend or direction. So I just want to start off by asking everyone to kind of imagine a world where you have the knowledge and the tools to reliably gauge the direction of any stock or ETF. This way to help you cut through the noise of all the different ideas that are probably floated to you across your desk every single day, from news sites to research sites to friends or family that give you different tips or ideas. How can you take all of these different ideas from different methodologies and reliably gauge where you feel that that stock's going to go up or down? That's really what I hope to help you guys better understand, is the set of tools that are available to you to help you do this, to cut through all of that noise. Today what we'll do is we'll review the indicators and tools that are available to you to achieve that. And then what I want to spend some time on is utilizing the platform to show you guys how you can leverage those bullish or bearish views using OptionsPlay to be able to place trades, bullish or bearish trades with limited risk and potentially higher returns using options. So it's a two-step webinar today. First, we're going to talk about how to gauge direction reliably on any underlying stock. Then we'll wrap this up by showing you how to quickly identify trading setups using options to allow you to actually take that directional view with limited risk and also potentially some higher returns by using options. So my name is Tony Zhang. I am the Chief Strategist here at OptionsPlay. I've spent pretty much my whole life as a market strategist helping users of all different backgrounds and trading strategies to better understand how to look at the markets. And really what we've developed here is a summation of all the work that I've done in my career in helping people better understand what's currently going on in the market. And my philosophy is always keep things simple. The simpler the things are, the easier it is for people to understand. It's easier for people to follow, and it's easier for you to consistently stay on top of it day after day. So that's what I really hope to show you guys here today. This webinar is recorded. So if for those of you that are may not be able to stay for the whole time, or maybe if you want to review any of these things, we will send out the recording about half an hour after we finish. I will include the slides for you so that you can actually follow along the slides while you watch the recording. And I'll spend about 15 minutes today using the slides. What I really want to spend most of the time on is the actual platform, showing you some real examples of real Canadian stocks on how to actually gauge direction and then how to leverage those into an options trade. So before I get started, just quick sound check. If you can hear me, please type yes into the chat window. I just want to make sure everyone can hear me loud and clear. Okay, great. Looks like everyone can hear me. So what I'm going to do is I'm going to launch a quick poll here. I just want to get a feel for the people in the room here. So please answer this poll that you see on your screen. Do you find researching a stock's trend or direction complex and overwhelming? Yes, no, or I'm not sure. Just so I get a feel for how comfortable people are with their style of analysis. Okay, looks like the room is actually pretty evenly split. About a third of you say yes, a third of you say no, and a third of you say I'm not sure. Looks like a slightly more of you are comfortable with the style of analysis that you currently do. About a third of you saying you're not sure what to look for, and about 28% of you say you're not quite sure. Okay, so it's a tie between yes and no, and then a few, and some of you say I'm not sure. That's okay. That's great. So that's what we're going to cover here today. Regardless of whether you have a specific system that you use today that you're comfortable with, or you feel completely lost when it comes to gauging the direction of a stock, we will show you a set of rules that will help you reliably gauge a stock's trend and direction. And for those of you that are not sure, hopefully you'll be able to learn something to help you guide you towards a view on this topic. So today what we're going to cover is a few different things. Number one, I want to talk about this concept of paralysis by analysis. It's really something that we're seeing more and more in our day because there's so much data available to us at our fingertips. It's simply overwhelming. It's not only the tools that are provided to you by your brokerage firm, the tools that are available to you for free on the internet, perhaps tools that you guys have paid for, newsletters, signal systems, everyone's trying to sell you or show you a way of analyzing the markets that they claim is better or worse. So what I want to talk about is how do we simplify your process of selecting stocks and analyzing those stocks. And we're going to do that through what we call trend and relative strength analysis. These are two tenets of technical analysis that we use heavily in our research when it comes to OptionsPlay. And I want to show you the strengths and weaknesses of each one. And then what I really want to focus on is showing you how you can use the two in conjunction with each other to find your directional edge. We want to show you how you can reliably use these two indicators to gauge a specific direction on the underlying stock. So we'll use some bullish and bearish examples to show you how you use trend and relative strength to gauge a directional view. And then lastly, what we want to do is actually show you some real examples with some real stocks so that you can see what we're talking about with the platform that you guys have access to, and then actually leverage that into some option plays or options strategies. So that's what we'll cover here today. Like I said, I'll spend about 15 minutes on the slides, and then I'll try to spend as much time as I can on the actual platform, and we'll wrap this up with the Q&A at the very end. So we live in a world of information and data overload. There simply is too many things to look at. Sometimes because there's so many things to look at, we get actually more confused than actually that it is helpful. We'd like to think that the more data we have, the more data points that we have to look at, the better and the more informed decisions we make. But we generally tend to find that the opposite is true. The more things you look at, the less clear things become. So how do you actually cut through all that noise? How do you look at just a few things that will help you gauge something reliably? And that's really where the tenets of technical analysis comes in, because we don't believe in necessarily having to analyze everything in the markets. We believe that everything is already reflected in the price of the stock. So by analyzing the price of the stock, we are already taking into account all the information that's readily available in the markets, and all we need to do is analyze the stock price, and that helps us gauge where we think the stock's going to go. So what I want to propose is to simplify, but I don't want to confuse this with simple. We want to simplify your life because, like I said, as a technical analyst, we believe that all information in the market, news events, fundamental data, all types of things that are out there is already reflected in the price instantly. So by analyzing the price, we are already accounting for all the information that's out there. So there's no need to necessarily piece out, a simple news announcement or product launch or anything like that. That's already all reflected in the market. So what I propose is breaking it down into two separate sections of analysis. One is what we call trend analysis. This is very simple. This is technical analysis using the charts, and the concept of technical analysis or trend analysis is to predict the future direction of a stock based on past data. This is simply saying what is likely going to happen in the future based on what has happened historically. And one of the things about technical analysts is that we believe that history may not repeat itself, but we certainly believe that history tends to rhyme. So this is where we would use there's many different ways of trend analysis, and I'm not necessarily saying one is better than the other, but I just have a few here as an example for those of you that have used these in the past. Moving averages is probably the most popular and most commonly used form of trend analysis. There's many different ways of using moving averages. You can use different moving averages, different periods of moving averages, different ways of calculating moving averages. Others may use trend lines or draw channels to help identify a trend. These are all generally trying to do the same thing through different methods or different techniques, if you will. But the whole idea of trend analysis of trend lines, channels, moving averages is all to try to figure out whether the stock is trending higher, trending lower, or perhaps trending sideways. The second method of analysis that I want to propose is relative strength. This is a very commonly used indicator amongst institutional investors because it helps people understand, what's in favor and what's out of favor, and that's really important from an institutional asset management perspective. And the relative strength is simply comparing the performance of a stock relative to the overall market. So you can do a simple relative strength analysis by simply taking the stock price and dividing it by some major indices such as the TSX 60 or any of the S&P indices. Any broad market index, you can compare the stock price to that index and see how it's performing on a relative basis. There are more sophisticated ways to do this, such as ranking models, such as Stock Chart's technical rank, Zacks fundamental models, Morningstar, IBD. There's plenty of different other ranking methodologies out there, and they're all also trying to do the same thing. What they do is they rank stocks against each other and tell you how a stock is performing relative to each other. So both methods of analysis, trend analysis and relative strength, has its pros and cons. Trend analysis allows you to quickly feel for whether the stock is trending higher or lower. Relative strength allows you to compare stocks against each other. However, what trend analysis doesn't do is it doesn't allow you to compare two stocks that may be trending higher in the same direction. So you could be looking at two stocks, both trending higher, but it doesn't really tell you which one's better than the other. And that's really where relative strength comes in. Relative strength tells you how one stock compares to the other. However, what relative strength doesn't tell you is whether a strong stock is continuing to strengthen or it's weakening. So that's really where you want to use a combination of the two. The two combined give you a much more powerful view of what's currently going on with each individual stock if you look at the trend analysis with the relative strength. Because like I said, trend analysis doesn't allow you to compare two stocks against each other, and relative strength doesn't give you an idea of whether a strong stock is continuing to strengthen or if it's starting to weaken. And that's really the strength of trend analysis. So let's see, how can we combine these two together? Now, the one thing I want to point out, with any form of trend analysis, with any form of relative strength, you don't necessarily have to subscribe to our version of trend analysis or relative strength. You may have your own way of analyzing the trend, and you may have your own way of looking at relative strength. But on the OptionsPlay tool, we use what's called a 1 month and 6 month trend indicator to give you an idea as far as what the current trend of a stock is. So we'll show you bullish, bearish, or neutral, and it's provided to you right here in the upper right-hand corner of the stock chart. And then we also have a relative strength ranking. It's called our technical score, and it ranges from 1 to 10. Very simple, quantifiable way to determine whether a stock is weak or strong. 1 are the weakest stocks in the market that are underperforming the overall market. 10 are the strongest stocks in the market, clearly outperforming the market. So what we want to do is propose a combination of this two. Now, one of the things that I want to point out as a strategist that has worked with traders over the last 13 years, looking at all different types of analysis, fundamental, technical, all types of technical trading styles, if you will. The one thing that I have found to work for people in the long run is not necessarily which indicators they look at or necessarily even how they look at those indicators, but more importantly, how consistently and methodical they are in the application of their indicators. Meaning, consistency is key here. It doesn't matter whether you use moving averages or Bollinger Bands or trend lines or channels, whatever form of trend analysis you feel most comfortable with, you should use. However, you should not use one form of trend analysis today and another form the next day and a different form the day after. That's where you lead to inconsistent results, meaning if you're going to use a 200-day moving average, stick to the 200-day moving average. If you like to use the 20-day moving average, stick to the 20-day moving average. Don't use different moving averages day in, day out, because that's when you're going to get inconsistent results. So the reason that we propose using our indicators is not to say that our indicators are best or we think is the holy grail to trading, but by using our indicators, you're using the same methodology day in and day out. So we do not change how we calculate 1 month and 6 month trend indicators. They are the same formulas day in and day out. So you constantly get the same application, a methodical application to reading the trend, and then the same methodical application to understanding how strong the stock is compared to the overall market. Is it a strong stock in the market? Is it a weak stock in the market? So now let's take a look at when you combine this two, what do you actually get? So what I have here is I have 4 different examples of how to actually use these 2 indicators in conjunction with each other to gain a directional edge. So the first 2 are pretty straightforward. They're very easy to remember. The strong bullish, which is a trend following method, and a strong bearish. And this is again, very straightforward. A strong bullish stock is very simple. It's a stock with strong relative strength, meaning a stock that's outperforming the overall market. These are the types of stocks that typically institutional money managers will want to own in their portfolios because it helps contribute to the outperformance of their benchmarks. If a stock is outperforming, the overall market, it's likely going to help them outperform the benchmark that they're benchmarked to. So they want to hang on to these stocks. They want these stocks in their portfolio. They're more likely to buy them. And institutional money managers are the folks that have the largest amount of money that have influence on the stock price. Now, when you put that in conjunction with each other with the trend indicator, this is really telling you that this is a stock not only relatively strong, but it's continuing to strengthen. And that's what the bullish trends tell us. So not only is this a strong stock, but it's continuing to be strong. Strong bearish is basically the exact opposite. This is a stock that has weak relative strength, so a stock that's underperforming the overall market. These are stocks that institutional money managers do not want to own, and if they do own them, they want to sell them because it's contributing to them to underperform their benchmarks. So they want to get rid of these stocks out of their portfolios because the longer they hold on to it, the more they're going to underperform their benchmarks. Now, we combine that with bearish trends. That's telling us not only is this a weak stock, it's actually continuing to weaken. So these are stocks that you would typically look for if you're looking for bearish ideas. Now, the first 2, both strong bullish and strong bearish, these are what I call trend following, meaning you're simply going with the trend. It's a strong stock continuing to strengthen, you're riding that wave higher, and then a strong bearish stock is a weak stock that's moving lower and you're riding that trend lower, okay? The second 2 are more what we call trend reversals. These are more contrarian traders, so a lot of people like to try to pick market tops or market bottoms. These are the types of setups that you'd be looking for if you're a contrarian trader. So this is what I call a bullish turnaround. This is a stock with weak relative strength, so a stock that has underperformed the overall market. It's actually a stock that's underperforming benchmarks, and it's exhibiting bullish trends. So what this means is that this is a weak stock, but that stock is no longer continuing to weaken. It's showing bullish trends, meaning it's starting to turn around. These are stocks that are likely that have bottomed. So if you're a long-term buy and hold investor and you're interested in this type of stock and you see this type of setup, this is a potential signal that maybe it's time to potentially get into this stock. Vice versa, a bearish turnaround, this is really stocks that have strong relative strength, but their trends have turned bearish. So meaning this is a strong stock that's outperformed the overall market, but that trend is likely to has come to an end. This is more likely where you would see with market tops. So especially for those of you that are invested in a specific stock and you start to see a bearish turnaround, this is a time to potentially take profit on your stock or potentially put on a hedge because that stock is possibly starting to turn lower. So what I really want to do is show you guys some real examples of these because that's really what's going to help you. Number one, when you get an idea, you can plug it into OptionsPlay and see where does a stock that you're looking at fall, because it gives you a very quick snapshot of what's currently going on with the stock by just using these two indicators alone and not having to look at a lot of other things to figure that out. And more importantly, if you're setting up a watch list or if you have some ideas, this helps you find bullish and bearish candidates to look at if you're looking for some new ideas. So let's take a look at this. I want to look at some real trading examples here. I have a few set up here. This is for those of you that are brand new and you haven't used OptionsPlay, welcome. This is a free tool available to you through the TMX or the Montreal Exchange, the Canadian exchange here in Canada. This tool is available to you free of charge because of the TMX is paying for it. So I highly recommend for those of you that are using this tool or to continue using this, and for those of you that do not have access to sign up for free, I will send the link to that in the email when we're finished in the webinar recording. So please sign up for the free trial or the free tool, and you'll be able to follow along with what we're talking about here today. So I'm going to start off with a few different examples here. Let's start off with Sucor Energy. This is a strong bullish stock. Very simple. As you can see, the 1 month and 6 month trend for the stock is bullish. The technical score is 9, telling you this is a very strong stock. So this is a stock that's outperforming the overall market, and the trend indicator is bullish. Not only is it bullish, it's actually been bullish for quite some time. So we not only show you the 1 month and the current 1 month and 6 month trend, we actually show you how that's changed over time. So as you can see, that trend has actually been bullish since March or late March, and has continued to be bullish this entire time. It turned neutral a little bit during late May and early June, but then started to turn bullish again. So these are the types of bullish setups that you'd be looking for if you're looking for bullish ideas, or if someone said, hey, you should look at Sucor Energy, you can quickly type this up and see very quickly, hey, this is likely a bullish stock that may continue going higher. The one thing I do want to point out is that the longer a stock has been in a trend, the less likely it's going to continue going. So it can trend for a long time, but just be careful if something's been in a trend for a very long time. Then those are always trickier to look at, because then you might be more likely near a market top. Another stock to look at. Element Fleet Management. Well, actually, let's take a look at a different stock first. Let's look at CNQ. Let's look at, I just talked about strong bullish. Now let's take a look at strong bearish stock. So this is a stock that's currently, as you can see, a technical score of 4. So this is a relatively weak stock, underperforming the overall market. As you can see, it's kind of moved sideways pretty much over the last 6 months. And recently, it really started to kind of, the trend quality has really started to fall off. As you can see, if you look at the trend indicator here on May 24th, that's when the 1 month trend turned neutral. May 25th, the 1 month trend turned bearish. And then right here on June 4th, both the 1 month and 6 month trend turned neutral. The 6 month trend turned neutral, the 1 month trend turned bearish, and then both 6 month and 1 month trends turned bearish here on June 12th. That was actually before the stock broke below this major support level. As you can see, since it's broken down that support level, bounced a little higher to test that. And my expectation would be for this to continue moving lower. So this is really where you can use these two indicators alone with our support and resistance indicators and not have to look at anything else, and quickly within a few seconds gauge a directional view on any underlying stock. Now, one of the things that I do want to show you now that I've shown you the 1 month and 6 month trend of the technical score, is that if you have either a trade idea through our trade ideas tool, so we scan for trade ideas every single day that allows you to quickly look for bullish and bearish ideas, and you can set up your own watch list so that you can create your own watch list or look at any of the pre-built watch lists that we have here. You can sort the watch list by the technical score. That allows you to quickly see which stocks are the strongest stocks in the market. As you can see, Bombardier, Sucor Energy, these are the strongest stocks in the market. And then you have EFM, Fortis, these types of stocks are the weakest stocks in the market just by looking at the score. And I don't even have to pull up the stock. I don't have to look at the chart. Just by looking at the score, I can tell you which are the strongest stocks in the market, which are the weakest stocks in the market. And then the color coding is designed to allow you to quickly see what the trend is. So here for Canadian Railway or Canadian Natural Resources, as you can see, it's got a score of 4 and the trend indicator are all red. That tells me that this is not only a weak stock, it's continuing to weaken. Versus EFN, as you can see, it's got a score of 2, but all the trend indicators are green. This is telling me that this is likely a bullish turnaround. This is a weak stock, so as you can see, if I zoom out a little further, it's had a pretty bad year. Since 2018, it started around $9, crashed all the way down to $3, so about a 60%, 70% decline this year alone, or just in a couple of months. And then recently, it looks like it's kind of formed a bit of a head and shoulders bottom and started to turn a little higher. As you can see, it actually turned higher right here on April 17th. So imagine if you were able to catch this on April 17th when the technical score was probably a 1, but the trend indicator started to turn bullish. You would have been able to catch this wave from about 476 all the way higher, and it actually turned both 1 month and 6 month trend turned bullish here on June 8th. So even if you got in on June 8th, you'd get in the stock around $6, and it broke above a resistance level, which is coming to test back as support. And so this would be a candidate that I would look for to potentially move higher. Now, I do want to point out that, these are all, I'm showing you all of these for illustrative purposes and for educational purposes. This is by no means a solicitation or recommendation to trade any of these securities. You should always do your own research ahead of time before, in addition to anything that we're showing you. But this allows you to quickly type in any stock and within a few seconds know exactly, is this a strong bullish stock or strong bearish stock? Or is this a stock that's kind of in between or starting to turn around either bearish or bullish? Allows you to very, very quickly take a look at that. So let's take a look at another example here. As you can see, I looked at my watch list. I looked at all the stocks with the high scores, and this one stood out to me because it's got a score of 7, but it's red across the board. What that tells me is that this is a strong stock, but these trends are starting to turn bearish. So this is what I would consider a bearish turnaround. So this Crescent Point's got a score of 7, telling me this is a relatively strong stock. As you can see, it had a pretty nice run here from April, from about $8 to about $12, and then it's recently kind of declined further. And as you can see, that trend quality really started to deteriorate here in early May, and then got progressively worse here in late May, and then really turned bearish a couple of days ago here on June 14th, before it broke below this 975 support. And then it's really kind of broken down below that support level. So this is all things pointing towards, perhaps at least this stock is topped. It's likely not going to continue moving higher, and the trend has started to turn bearish. This allows me to look at this as a potential bearish opportunity here, especially since it broke below that support level. You can look at the next support level as potential targets here if you're looking for a short here. And again, this is all designed so that you can click on any symbol and instantly see. So for BMO, as you can see, I got a score of 7, telling me this is a relatively strong stock. 1 month and 6 month trends are bullish, so this is definitely a strong stock that's actually trying to continue moving higher. And it's been bullish for quite some time. So as you can see, on April 26th, that's when the 1 month and 6 month trend turned bullish, when it was around $97, and the stock has moved about $5 higher since then. So that's really what these two indicators, when used in conjunction with each other, can be very powerful in helping you, number one, cut through all the noise so that you're not looking at 10 different technical indicators and fundamental data and all this other stuff in order to gauge a directional view on the stock. You can just type in any stock and quickly see between the technical score and the 1 month and 6 month trend what the directional view for the stock is. And more importantly, if you're looking at a watch list, you don't even have to pull up that stock. You can just look at a watch list and very quickly gauge, which stocks are weak and continuing to weaken. So here, BNS, it's got a score of 4, but it's red across the board. That tells me it's a weak stock and it's continuing to weaken. Barrick's Gold, same thing. However, if I look at Enbridge, as you can see, same thing, score of 4, but the trend indicators are starting to turn a little higher. As you can see, if I click on it, It looks like the trends turned a little positive here on June 11th. It's moved a little higher since then, so this could be a potential stock that has bottomed or is likely to not continue going lower. So this is what you can use our watch list or any of our trade ideas to quickly scan for a very large list of stocks and immediately know what opportunities are available for bullish stocks, bearish stocks, and maybe stocks that are starting to turn around. So with that, what I want to do is actually go back to some of these examples and show you, based on these views, how do you actually profit from them? How do you actually trade them? And that's really where the power of OptionsPlay comes in. So I'll step back real quick, and I just want to give a quick overview of the platform for those of you that are brand new. So we have trade ideas and watch lists here on the left, which I just covered. This is basically designed to help you understand what symbols should you look at, whether you're looking for fresh symbols through the trade ideas, or you have symbols that you want to look at through the watch list. This is designed to help you quickly understand what to look at. Now, the security analysis panel here in the middle is what we just spent a lot of time covering. What we really want to show you guys, again, is that 1 month and 6 month trend in conjunction with the technical score. And these two in conjunction with each other give you a much better view of what's currently going on with the stock than most other indicators, because these two are accounting for all of the different information that's available in the markets in the price action. And then we have things like support and resistance levels here, calculated and drawn for you on the chart so that you don't have to figure out how to figure out where the support and resistance levels are manually. And then lastly, you have things like earnings, dividends, and price action data here at the very bottom, so that you don't have to go to third-party websites or outside to find when is that next earnings or dividend date, which is very, very important when you're trading options to know when those next corporate events are. So once you have that directional view, once you have a thought on where you think the stock's going to go, you'll see two buttons here at the bottom. One says I'm bullish, one says I'm bearish. So depending on which button you press, that's really where the trading and income side here on the right comes into play. And this is really where it comes down to, once you have a directional view, how do you actually profit from that? So we call these three panels the what panel, the why panel, and the how panel. Meaning, what symbols do you want to look at? Why should you look at it? And lastly, how should you trade it? So when you click on I'm bullish, what we present to you is 3 bullish strategies. And these 3 strategies represent the 3 most popular trading strategies for most retail traders. So if you're bullish on Sucre Energy, you're likely either going to buy the stock. If you're a stock trader, you can buy a call option if you're relatively new to options and you're trading simple strategies. And for those of you that are a bit more advanced, that have some more experience trading, maybe a more advanced strategy like a call vertical or a spread. And these 3 strategies represent about 80% of the trading volume that most traders will trade if they're bullish on a specific stock. And what we wanted to do is not only provide these 3 as a starting point, but give you all the tools so that you can definitively know which one's going to be best for you. So Sucre Energy is trading at 52 right now. Let's say you think the stock's going to go back up to 54, maybe 54 and a half. So you can use our P&L simulator that allows you to put in any given scenario and actually see side by side which strategy gives you the best return or which strategy gives you the most amount of risk. So let's say you think the stock's going to go up to 54.50. You can punch that in. And what that tells you is that if you had bought the stock, you make about a 3.5% return. If you bought the call, you make a 28% return. But if you bought this call spread here on the right, you make a 59% return. So that you can definitively say, based on my views on the stock and where I think it's going to go, what are my expected returns? And you can say, what happens if it goes up to 56, that next the resistance level? Then you can say, hey, if I make a 6.5% return on the stock, 105% return on the call, which is quite attractive, but I get 154% return on this call spread if I'm correct and the stock does go up to $56 by expiration, which on this particular trade is August 17th. And we pick these expiration dates because this is where most people are trading, is between 1 to 2 months out. So we're looking at options usually between 1 to 2 months out for these types of trades. Conversely, this also allows you to say, what happens if I'm wrong? What happens if Sucre Energy goes back down to 50? Which is very possible. The stock maybe the stock is top. Maybe it's not going to go any further. How much money am I losing? Here, if you had bought the stock, you lose $257. If you bought this call, because when you buy a call or a spread, your risk is limited to what you've paid. So you risk $195. So here it costs you $5,000 to buy the stock, costs you $195 to buy this call. That's why your max risk here is $195. And if you bought this call spread, as you can see, you actually risk the least amount of money. So even if you're wrong, you're going to make less, you're going to lose less money here on the spread here on the right. And if you're right, you're going to make a higher return. That's why this strategy here on the right gives you the highest options play score, because it's looking at the risk reward of both gains and losses and seeing what are your potential true risk rewards, not only looking at what your potential gains are, but also looking at what are your potential risks and weighting the two by each other. Most platforms will give you a breakdown that looks like this. So you'll see unlimited reward on a call, max reward of 243. And all of these numbers, sometimes it's really difficult to compare because you have one strategy that has unlimited reward and another strategy that has a reward of only 243. But in order for that call to take advantage of that unlimited reward, the stock needs to go to infinity. And chances are it's not going to go there by August 17th. So let's look at more realistic numbers, and that's really how we created the options play score. This allows you to instantly, number one, find ideas on how to take advantage of a bullish or bearish view for any stock, gives you the tools to analyze the strategies further so you can decide which strategy is best for you based on your outlook for the stock. And once you've honed in on a trade that you want to make, you can click on the trade tab, and what we do is we provide you with all the information on how to enter this trade into your broker's platform. And one thing I want to point out, for those of you that are brand new to options trading and you're starting out, you're concerned about your risks, you're concerned about what strategy you're trading, I highly recommend you to take a look at the strategy checklist. This is available to you so that you look for the things that sometimes as beginners you might tend to overlook. So we wanted to cover some of the most common mistakes that people make and check for those things before you place a trade, and give you this color-coded grid so that you can very quickly see, hey, am I trading this correctly? Am I trading with the trend in the stock? Am I trading with the trend in the market? How's the options play score? Is there earnings between now and expiration? That's something that we see a lot of beginners tend to overlook. And lastly, spread and liquidity. How liquid is this option? Something that you may not be concerned about when you're trading stocks, but definitely something to look at when you're trading options is how liquid something is. And then once you're comfortable with this, you have all the information to enter this into your broker's platform, including the current bid-ask price, showing you where you can place your limit orders to potentially get your best possible fill. So this is all available to you free of charge through OptionsPlay. That's available to you because the TMX has subsidized the cost for you again. So I highly recommend any of you guys that are interested in trading any form of options or stocks, take a look at OptionsPlay. It's going to be able to help simplify your research for the underlying stock and allow you to quickly identify some option strategies. If not option strategies, you can always trade the stock. So let's take a look at a few other examples here. Let's look at CNQ. That was the example that we're looking at, Canadian Natural Resources. This was a weak stock that looks like the trend has actually continued to weaken. So maybe we're looking for some bearish opportunities. So when I click on I'm bearish, I'm going to be presented with 3 ideas on how to take a bearish view on CNQ. I can short the stock, which cost me a substantial amount of margin. I could buy this put option, which cost me only $166, which is substantially less risk than $4,000. And then I can also buy this put spread here, which only cost me $120, even further limiting my risk. That's really why option traders like to trade these types of debit spreads, because it really allows them to take a directional view for an underlying stock with fairly limited risk. So let's take a look at this trade. Canadian Railways trading at Canadian Natural Resources, is trading at 41.87. Looking at historical prices here, this stock has moved $6 in just a few days. So I don't think it's that crazy to say this stock might move down to this $36 support level by August 17th, which is about 59 days out. So 60 days out, I don't think it's that crazy to say that this stock could hit $36. So let's say what happens if the stock goes down to 36? Here, if I shorted the stock, I make a 14% return, which is pretty good. But if I bought this put, I make a 261% return if the stock goes down to 36. if I bought this put spread, I make a 233% return. So the put spread is actually, because it limits my potential reward, actually may not take full advantage of a big move down to $36. So that's why you can use this tool to definitively tell you which strategy gives you the best return. Not some, even though the strategy here on the right has a higher options play score, depending on what your views are, this strategy here in the middle may still give you the best return. So it depends on what your views are. So maybe you're not as aggressive. Maybe you don't think it's going to go down to 36. Maybe you think it's only going down to 39. As you can see, this now allows you to say, well, if you shorted the stock, you make a 6% return. If you bought this put, you make an 80% return. If you bought this put spread, you make a 150% return. That's really why this strategy here gives you the higher options play score, because most if the stock goes down to 40, if it goes down to 39, if it goes down to 38, 37, 30, even 36, really only until the stock hits around 36 and a half does this strategy here in the right start to outperform. So you really need a big move on the underlying stock for this put to start outperforming buying the put spread. Pretty much all other scenarios, you're going to get a higher return here on the spread. Vice versa, if let's say the stock happens to jump back up to 46, 47, what do you lose? What are you risking? That's also something very important to look at. If you shorted the stock, you lose $514. If you bought this put, you lose only $166, about a third of that. If you bought this put spread, you only lose $120, only a fifth of that. So that's really where buying this put or put spread gives you much better risk reward than buying or shorting shares. And that's really why a lot of options traders like to trade them, because if you're wrong, your risks are limited, meaning no matter what happens, even if the stock goes to 100, your risk is limited what you've paid for this put or put spread, versus if you shorted the stock, your risk is unlimited. And if you're correct, you're typically making a much higher return on your capital versus shorting the stock or buying the stock. As you can see, instead of a 10% return, you're looking at a 233% return. So these are the types of risk profiles that you would typically get when you're using these types of strategies to trade these directional views that you can quickly leverage using our tool. So just to give you a quick recap, use the 1 month and 6 month trend in conjunction with the technical score to allow you to quickly get a snapshot of what's currently going on in the stock, very quick view into whether the stock is in a bullish or bearish phase. Once you have that view, you can click on I'm bullish or I'm bearish. When you click on I'm bullish, you'll be presented with 3 bullish strategies as starting points to help you gauge, here are some ideas on how to take advantage of a bullish view. And bearish, same thing, gives you some bearish strategies. Use the P&L simulator. It's going to allow you to definitively tell you which strategy is best. If any of you have ever used a option chain, which I'm going to show you here in 1 second, you're going to notice that, and I've learned how to trade options using option chains, and it's very useful in many different ways. However, sometimes when you're looking at an option chain like this, it's really difficult to say, which one's better. Am I going to get a better reward by buying the $100 strike or the 101 strike, right? So you can't do that type of analysis when you're looking at a chain. Or if you're trying to decide, should I buy the July strike or the August strike? It's really difficult for you to compare these two side by side when you're looking at the chain. On OptionsPlay, you can change any of these. You can click on Modify. You can use our strategy constructor to say, well, let me look at a different put. Instead of looking at the August 17th 42 put, what if I looked at the August 17th 40 put? Then what happens if the stock goes down to $37? What are my expected returns? As you can see here, if I bought the 40 put, I actually make a higher return than if I bought the 42 put. But what happens if I think the stock's going to move a little, not as much? As you can see here, I make a 42% return on the 42 put, and I lose 60% of my return on the 40 put. So that tells me maybe I shouldn't trade the 40 put, maybe I'll trade the 42 put. But this allows you to actually definitively know which one's best, as opposed to many times when you're looking at the page like this, it's kind of more of an educated guess or an estimate. This is really where we want to use as much data as possible to help drive your decisions so that you're not figuring these things out after you place your trade. You know definitively before you place a trade which one's best for you so that you're confident in the trades that you make. So I hope that you guys were able to take this webinar and find it useful in helping you gauge not only the direction of the stock that you're currently trading, but more importantly, helping you be confident in your selections when you're trying to decide which options to trade. So with that, what I'm going to do is I'm going to bring this back to our slides. And like I said, in the recording that I'll send you after this webinar, you'll receive the slides. In the slides, we have a few different links that are very useful to you. We have a link to all of our webinar recordings so that you can look at some previous webinars we've done. We have ones on covered calls. We have ones on trading earnings. We have platform walkthroughs of OptionsPlay. So if it's your first time using OptionsPlay, I highly recommend you to do that. For any of you that like to trade US listed securities, we have a link to OptionsPlay for the US side of things. And more importantly, follow us on YouTube, because then you'll be able to get all the updates for the webinars that we do. So even if you aren't subscribed to a webinar, even if you didn't register, you'll still get those updates. So please, if you have any questions, please type them into the chat window, and I'll try to answer as many questions as possible before we leave here today. So let's take a look. It looks like I have a few different questions up here already. Durga, I've requested an extension on my US platform. I have not gotten a response. Durga, please send me an email, info@optionsplay.com. I'm not sure where your emails go, but please send me one at info@optionsplay.com, and I'll be able to do that for you. Can you find implied volatility? So yes, we do have implied volatility right here. So it's the volatility slider right here. This tells you the current implied vol of the expiration that you're currently looking at. We don't show you the history of the implied volatility. And partially we do that for a couple of different reasons, because simply looking at the history of volatility doesn't really help you understand where volatility will go in the future. And we also, one of the things about trading volatility is that volatility is actually a very, very small component of the P&L of your trade. The directional view you have on the stock is much, much larger, or the delta exposure you have on an option is much, much larger in terms of the impact to your P&L than your volatility. Because as I'll show you real quick, if you had bought this put, this August 17th 42 put, the implied vol on that trade right now is about 25%. So, and you can see you make $100 profit or a 60% return if the stock goes down to, let's say it goes down to $39, you make a 92% return. What happens if the stock drops by a full 5 percentage points in vol, which is a pretty big jump? As you can see, we move from about 90%, 92% to about 87%, a very, very small impact to your overall P&L from volatility. Even if volatility expands by 5%, as you can see, you move from 92% to 99%. Very small changes in your P&L versus if the stock goes from 39 to 38, as you can see, from 39 to 38, your impact goes from 92% to 150%. That's really why we want people to focus more so on the directional views on your underlying stock, because that's really what contributes to gains and losses in your option strategies. Volatility actually contributes to a very, very, very small percentage of your gains and losses when it comes to your strategies. So that's kind of why we've shied away a little bit from volatility, because we tend to find people focus too much on that and not enough on the directional view, which is really where your exposure is. Why is the data delayed 20 minutes? Good question. It's because this platform is completely free of charge to you. It's completely subsidized by the TMX. That's why the data is delayed by 20 minutes. Any way to sort trade ideas by liquidity? Absolutely. So on trade ideas, you can sort by market cap. So I would say there's no such thing as sorting by liquidity, but by default, the larger cap stocks have more liquidity than the smaller cap names. So if you're looking at smaller cap names, CF, DGQ, these are likely less liquid names versus the large cap names are likely going to be much more liquid. Great question. Please show an example with weed or ACD. So I get this request a lot these days. So as you can see, weed, very strong stock, score of 10. 1 month and 6 month trends are bullish, telling me that this is not only a strong stock, it's continuing to trend higher. And as you can see, it started this trend here on May 14th. So think about if you were able to catch this on May 14th, when both the 1 month and 6 month trend turned bullish, when it was trading about $32. This stock had a really nice run since then, up to $40. You know, this is a strong stock. It's in a sector that's extremely hot in the Canadian markets. So if I'm looking for ideas, I would be looking for some bullish ideas. And the key thing here is I would want to take a bullish view with limited risk, simply because the stock is already trading relatively high. You know, it's moved about 30% since it turned bullish, which is a lot to move in about a month. So if I was trading this, I would want to limit my risk as much as possible. And that's why I typically like to trade these call spreads, because if the stock doesn't go in my favor, let's say I get into this trade and 40 is the kind of a top and it goes back down to 35, my risk is limited to what I've paid. And I'm risking the least amount of money when I'm trading these types of spreads. And yet, if I'm right, if let's say the stock does continue going higher, I actually make a higher return. That's why the strategy here on the right gives me the highest options play score. So that's how you can use our tool to quickly, number one, type in a stock, gauge a directional view, and then find a quick strategy that allows you to trade that directional view with limited risk. What is the cost of your platform? This platform is completely free of charge. That's why I highly recommend for any of you that are interested in analyzing stocks or options to sign up, because it's free of charge to you through the TMX. I'll send the link in the email recording once we're done, or actually I'll just type it into the chat window. So for all of you that are looking, that do not have access to this, please visit optionsplay.com/TMX. That will give you free access to this platform that I'm showing you guys here today. And yes, this webinar is recorded so that you'll be able to watch a recording later tonight. Do you have a checklist for exiting strategy you've purchased? So that we sort of do, but because there are so many different strategies and for each one there's a different checklist or a different way of exiting, I can't cover all of them today. So Bruce, if you have a specific example, please shoot me an email at info@optionsplay.com. I'm happy to discuss with you kind of your specific strategy and what you should be looking for when you're trying to exit those ideas. Any other questions regarding kind of anything that we went over here today regarding understanding the trend of a stock, and more importantly, how to leverage that into an option strategy? If I don't have any more questions, I would just like to ask the audience, you know, did you find today's webinar useful? Did you find it useful in helping you gauge the direction for a stock? You know, using the trend and technical indicators to quickly gauge a bullish bearish view on the stock? And more importantly, you know, how do you guys find the tool to help you quickly find trades? You know, because that's really, having a directional view doesn't mean anything. You still need to trade it in order to profit. So what you trade is actually more important than your views. So if you guys find this useful, great. You know, I want to do more webinars that on topics that you guys find useful, or you know, topics that you guys want us to cover. You know, we're happy to kind of tailor the webinars towards what you guys are looking for. Peter's asking, how about deep out of the money put to play correction? Great question. So let's just look at weed, for example, and I don't necessarily mean to use this stock, it's just the one that's up here. You can use out of the money puts, deep out of the money puts to play that, but you know, typically they have very low deltas. So let's take a look at a way out of the money put here. Weed's trading at $42. Let's look at the August 17th, or let's look at a slightly longer dated. Let's look at an October 34 put. As you can see, it's got a very poor options play score. And the reason for that really is that the stock, you know, it needs to move a substantial amount before this strategy is profitable. Unless this move happens very quickly. So for example, if the stock moves by, let's say, September, down very quickly. So this is really where, you know, my suggestion to you is, if you want to use out of the money puts to buy protection, set up a few different puts next to each other. You know, that's really what the power of this platform is. You know, should you buy an October 42 put? Should you buy a 40 put? Or should you buy, I don't know, a 36 put? You can put any 3 strategies side by side. So let's take a look at a different puts. Let's look at 35 versus. So here I have 3 puts. I have October 40 put, October 38 put, and October 35 put. You know, when you're looking at that chain, it's really difficult to figure out which one should I buy, right? And that really depends on how bearish are you on the markets. And that's really what the P&L simulator allows you to do. So you can say, I think the stock's going to move down to a certain amount by a certain date. And whatever that thought you have, this tool tells you definitively which one gives you the best return. If you think the stock's going to make a move very quickly, you think it's going to go down to $32 very quickly, then you know definitively this strategy here on the right gives you the best return or gives you the best hedge. So this is all allows you to quickly define what your views are and see how the different risk profiles are for each one of these 3 stocks and tells you which one gives you the best return. So that's really why we built this tool, because you know, when we were trading off of these types of screens, a lot of times we were just guesstimating. We were trying to do a back of the envelope calculations for a lot of these things because we didn't have the tools to say, how do I compare 3 different puts next to each other and know how much return am I going to get if the stock moves down 10%? You know, all of that stuff we had to do in our head. We had to do guesstimations, if you will. This tells you definitively which one's best so that you don't have to guess. You don't have to even do any back of the envelope calculations. You just have to type in your views and it'll immediately tell you which one's best. And that's really where this is why we created this platform, so that you're not guessing what to do, you know definitively what to do. Ken, great. I really hope that you guys find this useful because complex option strategies are confusing. They are complex. There's no doubt about it. Even someone who's been trading options for 10 years, if you gave me a spread and you told me calculate the potential returns in my head, it would still take me a few seconds to think about all the different legs and how to put them together. And that's coming from someone who's doing this for a living. So I can't imagine if you're just trading, you know, on the side, you know, if you're dabbling in options, I can't expect you guys to do any of these types of calculations in your head. And I don't want you to. I want you guys to have definitive risk and return profiles, so you know exactly what you're risking, you know exactly what your potential returns are, so that you make better educated decisions before you place your trade. I find the focus on percentage returns interesting, as my training for options trading has always focused on dollar profit or losses, not percentages, because percentages skews the decision to trade. Well, I always think of things in percentages, unless you're trading the same dollar amount every single time, which you generally are not. I always like to trade in terms of percentages. Can we sort trade ideas or watches by options trading volume? We cannot, but again, like I said, the market cap is going to be your best way to sort by liquidity, because again, the larger cap names is where you're going to see the more liquidity. And the other thing is that volume is not always indicative of liquidity. Just, you know, weed has a lot of volume, but it's not necessarily very liquid. Vice versa, you know, some of the ETFs that are very, very liquid may not have a lot of volume. So that is always some kind of a misnomer. That's why when you hit the trade button, we look at spread and liquidity, and we do that by looking at the spread between the bid and the ask price. That's a much better gauge for liquidity on an option. Roland, Raymond, Ken, you know, Peter, thank you very much. Krish, Bruce, Rudy, thank you very much for saying that you found this useful. You know, that's really kind of why we're here. We're here to try to do as many of these webinars as possible to help you guys learn so that you're more confident in your trading. Any more questions? If not, like I said, this webinar is recorded. I'll try to get this recording out to everyone in about half an hour. I will include the slides so that you have those links at the end of the slides, and also just have the slides so that you can follow along. And I just want to thank everyone for taking the time out this afternoon. I really hope that you guys have found this useful and you're able to utilize this tool to the full extent. You know, it's free of charge to you, so I highly recommend you guys to take a look if you haven't already signed up. again, thanks everyone for joining this afternoon. I hope you guys have a great day, and I'll see you guys in a few weeks on the next webinar.